Hello and welcome to Weekend Investing Daily Bytes. We're shooting episode 282. Today is 14th of September, and what a comeback the market had today after opening almost 300 points lower on the Nifty, on the back of the US markets getting totally jolted. A trillion and a half of market cap gone from the US markets, almost half of India's GDP. A crazy day last night, crazy market day, for our purposes. And it was sort of assumed that we will tank along with the US markets, but we did not, and we came back, rising like a phoenix and just belying all such expectations that we will toe the line that the US market is having, thus proving that Indian markets are on a very different wicket right now. US markets are at 52 weeks lows, we are at 52 week highs or near that. That is a whole world of a difference between what the market is trying to tell you. So far so good. We are in extremely good stead, and I don't think there is any need for any major worry unless something India specific happens now. I think a lot of these headwinds, which were more global in nature, have come and tried to destabilize the market, but India has stood well. So until we see some new headwinds which are specific to India which are developing, I don't think this will shake off very easily. And my gut feel, although it is wrong 50% of the times, I think we are headed for a very exuberant rest of the year here on. So let's see how that takes place. So PSU banks are up 1.74% today. I mean, not coming back into green, but going further up by almost 2%. Metals up 1.5%. Private banks also up 1.5%. Commodity stocks 0.71%. The only sector that really got smashed was IT, which was expected. IT trails NASDAQ, and we'll see that in the rest of the daily bite today. Real estate also was lagging a bit, along with pharma and energy, but not to the extent of the damage of IT. And IT remains the worst performing sector this year in financial year 22-23, down 22.5%, and only metals and pharma are down a little bit, but other than that, most other sectors have done well. In terms of the broader indices, Nifty still closed 0.37% lower. CNX 200, CNX 500 also 0.25% lower. Mid and small cap index also 0.21% lower. Small caps managing to just stay even. Nifty next 50, however, up 0.5%. So Nifty next 50 is actually a beautiful sub-segment of large caps, which performs very, very well. And the MI NNF10 strategy, which trails, or which is a subset of the Nifty next 50 stocks, did very beautifully today at plus almost 1%. MI25 also doing well at plus 0.67%. MI India top 10 doing quite well, while Nifty was bleeding minus 0.4%. This was up 0.46%. So pretty good contra move here. MI80H, MI50, MI35 all doing reasonably well. The ones in green, the ones in red were MI20, MI30, MI EverGreen, MI8H2, and NG50 to some extent. So overall, not such a bad day. The heat map, of course, the heat is there in IT stocks. Infosys down 4.5%, Nifty, TCS down 3.5%, Wipro, HCL Tech all down 1.5 to 2.5%, Reliance down 1.5%. Levers, Tata Consumers also down in the FMCG pack. Where do you see maximum green? Power stocks, NTPC Power Grid making new highs, plus 3%, plus 2.5%. State Bank of India making new highs, 2.5%. Kotak Bank up. IndusInd Bank making a large move at plus 4.5%. And other banks also moving alongside. Autos took a breather. Tata Steel, Hindalco were also up, and cement stocks were also doing well today. FMCG, a kind of sideways move. L&T taking a small hit of 1.88%. So overall, a reasonably good situation. Tata Investment Corp is up another 20%. It has been gaining and was in the top gainers in the last few days, but another 20%. So holding company stocks have really gone through the roof in the last few sessions. JK Lakshmi Cement up 12%, Mahindra Logistics up 11%, Vedanta after announcing chip factory manufacturing in Gujarat up 10%, Kalyan Jewellers up 10%. Huge moves. Pakarangi down in the losing section -5%, Infosys of course down 4.5%, L&T Tech -4.2%, Suzlon Energy has gone and come back all the way in 2 weeks, down 4%, and ZF down 4% in today's top losers. We got the heading wrong, apologies for that, but the chart is that of CNX IT versus NASDAQ, and CNX IT has been normalized for USD INR, so CNX IT is also in USD and NASDAQ is also in USD of course, and the CNX IT is the blue line, NASDAQ is the orange line. So we have this sort of, you talk to 10 people, many people will tell you, oh yeah, we missed the NASDAQ rally. We should have invested in Google and Microsoft and all other NASDAQ stocks, Tesla. We should have done that. But just see this. I mean, this is last 20 years of data for NASDAQ and for CNX IT, and that too normalized in USD terms. So there is no comparison of INR to USD terms here. Both are in USD, and you can see that over 20 years both have performed the same. So you did not have to venture out to the US markets, to NASDAQ to get this performance. This performance was available right in your own home territory in INR domain. So you could have used the IT index and played the same move on the NASDAQ sitting here in India without having to go for a USD account and then do the complicated taxation and so on and so forth. So just a sort of a revelation that a lot of people, it was a surprise to me also. I mean, it is something that we don't really correlate so easily. And if I show this chart to you in INR, CNX IT versus NASDAQ is nowhere near CNX IT, because in the last 20 years the dollar has gone from 40 to 80. So amazing performance by CNX IT. Of course, in the last few months, CNX IT has not performed, but post COVID, in the last you can say 2 years and 5 months, you can see that CNX IT is still up 125% from COVID bottom, whereas NASDAQ is up 58%. And I have not normalized this because the USD INR has not changed dramatically in this period. But you get the point that don't run after NASDAQ just because it is hearsay that NASDAQ stories are really good and NASDAQ is doing extremely well. Our own homegrown CNX IT is doing extremely well versus NASDAQ. So please invest in CNX IT whenever you want to invest in NASDAQ, and maybe you will get better returns sitting here in India. Another thought for the day. I mean, if you recall, 9:15 this morning, everybody was looking at minus 300 points on Nifty, and I don't know where the Nifty will go. So some folks came to the market full of anxiety what will happen to their positions. Other folks came to the market with super excitement that they will be able to buy stocks cheap. And the same market, but it's a different outcome for different folks. So you need to see what kind of a trader, investor, what kind of time frame suits you. Do things which are comfortable. Don't do things which will make you lose your sleep. In trading, of course, you need to also look at your leverage, your position sizing. Those things are very, very important. But in investing, you may get lower returns, but a more robust mechanism of a rule-based long-term investing is possible. I would think that scalability is a large issue in trading. Once you become supersized, investing is the easier sort of option, and trading becomes extremely difficult, especially in Indian market context. So from that perspective, unless you are a very sharp shooter, which some of you are, investing will give you a lot of peace, a lot of good returns, and good sleep at night. So with this short message, I want to end this daily bite. Thank you so much for watching, and please do share this with your friends. If you like it, give it a like. If you haven't subscribed, please subscribe to the channel and give us feedback as to what you would like to hear in the upcoming daily bites. Thank you. Bye.